Hi, Kristina Subbotina here. Welcome to my channel about investments. Today's topic is stock market for beginners, how to start investing. In this video, you will learn everything you need to know to start investing. What is investing? What is your investment horizon? How to choose a broker? 2 ways to invest in stocks. What is the first investment to make? And at the end of the video, I'll share with you one of the best investment books. Just a reminder, in this video, I do not provide any investment, legal, or tax advice for you. All the information provided is for educational purposes only, and you always have to do your own research. With that out of the way, let's get started. First question, what is investing? In the world of finance, investing is putting your money into something with the expectation of making more money. For example, you buy in shares with the hope that they will worth more in the future and you can sell at a profit. Or when you buy real estate and then you rent it out to receive that rental income. In addition to stocks and real estate, there are other assets you can invest in. For example, bonds, commodities, or even fine art. What is an investment horizon? When you construct your own investment portfolio, this is the first question you need to answer. An investment horizon is the length of time you're willing to hold your investment for. Basically, in other words, it's the answer to the question, from the date of investment, when do I need my money back? The answer to this question depends on a couple of things. First, how close you are to the retirement. The closer you are, the sooner you may need that money. Second, whether you would need your money for emergencies or big purchases, such as down payment or wedding. For example, a young professional with enough savings to cover any emergencies would have an investment horizon spanning through decades. Generally, the longer the investment horizon, the more risk you can take. The reason why is because if, for example, 1 year the market goes down, in the event of this pullback, you would have more years to recover your investment portfolio. And the longer your investment horizon, the higher risk you can take. Thus, you can have majority of your portfolio in stocks. On the other hand, if you're closer to retirement, you may want to opt out for fixed income assets, such as money market funds or short-term bond funds. One of the ways to determine the ratio between stocks and bonds is to deduct your age from 100. For example, if you're 30 years old, you can have 30% in bonds and 70% in stocks. So your investment portfolio needs to be adjusted as you're moving closer to retirement. So if now you have 70% in stocks, then moving closer to retirement, you would need to decrease the stocks portion of your investment portfolio and increase the bonds portion of your investment portfolio. Another important consideration to define your investment horizon is whether you expect a big purchase within the next 12-18 months. If you do, then consider putting your money into a money market fund or short-term bond fund, because that way you can take that money whenever you need them. If you invest in stocks, you never know whether the stock market is going to go up or down. And with money market fund, for example, you have that safety and security, then you have your money available whenever you need them. 2 ways to invest in stocks. If you're a beginner investing long-term, I would say you have 2 options. First, you can invest with one of the robo-advisors, for example, Wealthfront, Wealthsimple, Betterment. With robo-advisor, you just open an account, choose your risk tolerance, and make a deposit. And the rest will be done by those robo-advisors. You don't need to pick and choose your own stocks, your own portfolio. This job will be done by robo-advisor. And I talk in more detail about robo-advisors in this video. Second choice, open your brokerage account and invest on your own in index funds, exchange traded funds or ETFs, and even individual stocks. I talk in more detail about how to choose them in this video. That was exactly my journey. I opened a Wealthfront account in 2018 and now I have 15,000 managed for free there, about 13% return. And later I opened an account with E-Trades. It's a brokerage account and I invest on my own in ETFs, index funds, and individual stocks. And in this video, I'm sharing with you how to invest on your own. How to choose a brokerage account. You do need a brokerage account to buy stocks. There are 2 types of brokerage accounts: full service broker and online or discount broker. The difference between them that a full service broker, it's a person to whom you can call and ask, I want to invest this amount of money, what should I do? And that person will perform all the investment analysis, research for you, build portfolio, will make the orders and execute them for you. You don't need to do anything but just share your goals with that person. In exchange for that pretty comprehensive service, you will be charged commission fees. With online broker, on the other hand, you will not be charged commissions, but you will also not get an investment advice. Online broker is just the app that you use. You already know where to invest. You did your own research. You picked and choose your own funds and stocks, and you just put an order, and online broker execute that order on your behalf. But as I said, online or discount brokers don't do any research for you. They don't help you to make the investment decisions. Which one is right for you? It is up to you. If you have time and desire to do your own research, and I assume you do because you're watching this video now, then I would go with online broker to save up on commissions. And there are so many online brokers out there, they charge $0 fee on all stock transactions. For example, Vanguard, Schwab, Fidelity, E-Trades, as you can see on this picture. I personally use and love E-Trades. What first investment to make? If you're just beginning to invest, I recommend investing in index funds and exchange traded funds, so ETFs, tracking one of the indexes, for example, S&P 500, Dow Jones, or NASDAQ. Those indexes are just baskets of stocks. For example, S&P 500 has stocks of 500 companies, Dow Jones has stocks of 30 companies, and NASDAQ has stocks of 2,500 companies. And alternatively, you can invest in every single one of those companies, but then you would have to have a lot of money to invest in every single company in S&P 500 index. 500 companies, that's a lot of money to buy even one share. That's why investing in those index funds or ETFs is an efficient way to invest in stocks, because you will get a diversified investment portfolio for a reasonable price. You probably heard in the news Dow Jones went down 600 points or S&P 500 went up 12%. What it means? It means that the stock prices of those companies included in those indexes, they went either up or down. That's all that it means. And by investing in those index funds or ETFs, you will be automatically invested in all the companies included in those indexes. How to choose a specific index fund or ETF? I have a separate video about it here, but in a nutshell, if you're just beginning to invest, I'd start from investing in S&P 500 index fund or ETF. Why? Because S&P 500 is one of the most diversified, popular, and respected indexes out there. If you invest in an S&P 500 index, you will be automatically invested in those 500 companies. Which exactly S&P 500 fund to choose? Every investment company offers one. Vanguard, Fidelity, Schwab, you pick and choose. I personally love Vanguard, and they have S&P 500 index fund called VFIAX, and Vanguard S&P 500 ETF, the ticker is VOO. Those tickers, VOO and VFIAX, they're just abbreviations of the fund's names, and it will be easier for you to find those and buy them. So when you open the brokerage account with one of the brokers, you log in and you put those ticker numbers, VOO or VFIAX, and then you can easily buy shares of them. By the way, one of the most respected and successful investors in the world, Warren Buffett, he recommends buying S&P 500 index fund, and exactly by Vanguard. The reason why is because 90% of fund managers, they fail to outperform S&P 500 index fund. And lastly, good investment book that I recommend to you, as I promised, I highly recommend Intelligent Investor by Benjamin Graham. That's the book that Warren Buffett also recommends, and I've been rereading it many times, and every time I find something new for you. So that's a great book to read. And lastly, I would like to give you advice that will be really helpful if you're just starting out your investment journey. Start with comfortable amount, allocate a comfortable investment budget for yourself. It could be $50, it could be $100 a month, whatever you feel comfortable with. It's like going to the gym for the first time. You don't come to the gym and don't pick up the heaviest weight out there. You start your way from the minimum amount and then you build your way up. The same applies to investments. You don't want to overstretch yourself and get discouraged because you fail to maintain that high goal that you set up. Start with something you feel comfortable with. Get into a habit of investing. And once you have that habit, there's only the way up. And while you're building your way up, educate yourself. Read investment books, read articles, watch my videos of other YouTubers out there, and subscribe to my channel and hit the like button if you like the video.